Good evening, welcome everyone to our Cycles TV session for today. We will start now with the weekly series, so I hope you will like it. My name is Lars von Tienen and we will review kind of cycle analysis once a week. So the purpose is that we just check in and review the current data sets which we have with the latest status, so that we walk a little bit through cycle analysis and to check a little bit the tools we provide, which are available also for you to check it. So the purpose is not to do real kind of market forecasting, because market forecasting involves a lot more than just cycle analysis, but we stick to cycle analysis here in the foundation, and therefore let's just dig into our cycles for today. So if we look at what we have today. So the purpose is we will review for 15 minutes, 20 minutes each week the current status of cycles. So to do that, we will use our cycles tool, which is available here, and I've just logged in with my account to check now the current status. So let's now go through some basic data sets and just watch me browsing the cycles and to analyze what the cycle is. I will watch in parallel a little bit the live chat. So if you want to discuss topics, feel free to drop me a note in the chat, or we can review after the session here. Let's start. I mean, commodities is one area where we might look about what's within the cycles. I like a little bit silver more than gold, so let's just open silver as a data set, and we can then browse the cycles on the silver. So this is the current analysis for silver. I think it was updated on Friday. I think after the close we will also see the data of today. So what happens here is that on the left-hand screen we see the raw data set, and on the right-hand side we see the list of active cycles which have been detected here in this data set. If you scroll down this chart, you will see the classical spectrum analysis, which is important when we deal with cycles. So this is done automatically. So once you open your data set, you will just see the spectrum and cycle analysis as you open the data set. So you can do two things now. You can browse the scanner results here, the full spectrum chart on the bottom of this page, or you can just look at the data list, which is more or less the peaks from this cycle spectrum here, are then also listed here on the right hand side in this chart. So what you will look for, I'd say, dominant cycles, and active cycles are where we have peaks in the scanner chart here. And there are two additional values which are always very important for us. One is the so-called Bartels score, which gives us an indication on the statistical reliability and significance of a cycle. So it's a kind of different measure than just doing kind of cycle analysis. The higher the Bartels value here in this case, the more reliable the cycle is over the whole period of the data set. So this is indicated here by green triangles on top of these cycles here. And another measure is the so-called strength. This is the kind of relative move for each cycle per bar. So in this case, we are looking on daily cycles here. And this is indicated by the size of the triangle. So what you will look for in short terms is green triangles, which are the largest one here on this chart. So we have a clear one here with the length of 213 days. So this would be a good starting point here. And we see the same cycle also here on the list with a length of 213 days. So let's now activate this cycle to get it started. So this will then overlay this cycle with the raw data set. And first you should kind of give it a quick check in relation to where are the tops and lows are aligned in the past. So this is kind of main observations here. So the cycle should be kind of aligned with the past tops and bottoms. And you do not need to pay attention to the absolute amplitude of this cycle. So you see, for example, during 2019, you have a high here in the market. For sure, the relative amount of move is not as large as the amplitude suggests, but we use cycles as a timing instrument and not as an instrument to project kind of price moves. So in regards to timing, yeah, the cycle here through 213 days looks quite good in overall. So this seems to be a main cycle here. So then you can now follow this cycle into the future. And if we just look at silver, can zoom in a little bit. This cycle suggests that we have, or silver has started a downturn here beginning September, end of August, beginning September, and is now kind of downward approaching into the end of this year or beginning next year. So, I mean, we have kind of sideways movement here. So this cycle stopped the upward trend. So the upward cycle from March 2020. So now into the September period has kind of more or less stopped. Silver's on downtrend now. We are half passed through the cycle here. Always interesting point, the half cycle turning point. But that's at least the starting point for cycle analysis. You can now get more into the depth here of this analysis if you add additional cycles for the composite. So we could do this by looking what would be the kind of next interesting cycle. I mean, there are shorter ones here with the lengths of 27 or 30. But to be honest, I think if you just add these short-term cycle, it will a little bit clutter the overall cycle. So in regards to the main timing points, I would not include these short-term cycles here. You could, but at least if they are reliable for short-term, I mean, we need to be careful here. You should add other measures, but would be possible. And the cycle with a length of 60. Let's see where it is here. Yeah, the Bartle score is okay. It's a clear peak. Strength is okay, so we could use it. And this will then sharpen the picture a little bit. But again, the main reading of this cycle analysis is that silver, from the dominant cycle perspective here, or the composite cycle forecast, is in a kind of down cycle phase here. Okay, that's silver. That's how you read silver. Let's go back to the main dashboard here. Let's maybe use another commodity, maybe also to show you are not limited to what's kind of fixed here in this market pool section. You can switch over to the scanner and more or less open any data set you would look like. So for example, for another commodity, let's just pick oil. Now let's go to the futures contract. So this is the symbol here where you will find the oil futures within Yahoo, and we have put just a wrapper around the Yahoo data feed. So with this data feed ID, you could open oil, so the oil futures here, which has now been shown up. So this is the oil futures, continuous futures here. And now we do the same procedure. We will look for kind of most interesting peaks in our spectrum here, which are at least this one here, which clearly shows up. So cycle lengths of 176, a good Bartle score, and a high strength indicated by the big size of this triangle here. So this would be the starting point to start any cycle analysis here. So this is also shown here on top. So we will pick and activate this one here. You will see also high Bartle score, good strength, high amplitude in comparison to the other ones. So let's pick this one here as first cycle here. And here you also see the tops and bottom, just a cross check, just a quick validation here, do align with the past bottoms and highs here. And if we are interested in the current status of this cycle here, so the cycle also indicated a kind of peak around beginning of August here, and a downward move into mid-November for this larger cycle here. So we are in this period, we are in a sideways move. So what you also need to keep in mind, if this signals a kind of change in trend, so, or we could also go back in time here. Let's say we go back to beginning of June this year. So this would be now the analysis beginning of June. And we can now see what the cycles would have projected here. So the data on the right-hand side has already been updated here. So the cycle has slightly changed. So beginning of June, a length cycle with 172 days would have been detected. So therefore, We will use this one here. And this would have been the projection beginning of June for this cycle here without knowing what will come here. So, and just projecting kind of market top here around, end of July. So I will not just show the light blue data. So this is how the market proceeded, or the real data proceeded, not known by the analysis here. So when you see this kind of projection here, so a change in trend in July. So you see here, we've been in an upward trend here. So then just slightly sideways to upwards until June, and then kind of moving sideways downwards. So even if you're coming from a strong upward trend, which we did here from April to June, and then a change in trend expected in July, even a sideways phase then, which we've seen here in oil, is kind of confirmation that the upward cycle has now been switched, because the cycle analysis is done on detrended data. And even the sideways moves coming from a strong upward trend would signal kind of we confirm this downward cycle with the sideways move here into kind of November. So if we would have followed this forecast here from April without any update, this is what we see here. We just project the cycle into the future where we are today, November. So the forecast from June would signal as a low kind of here in November, and now kind of upward swing in oil. But you should never trust a static cycle for this kind of long period. So I will now update the data again back to where we left. So let's include every data. The cycle switched to the length of 176. And you see also phase did not change a lot here. So we are still now projecting towards a kind of turning point in oil. So this could be interesting to monitor here. So maybe the next upward cycle in oil might be happen to start here, or it's just around the corner. You also need to cross-check for sure with other cycles. So you could add the cycle here with a length of 114, which we could do here, which won't change the overall projection. So this is what I do mainly here. Even there's a slight shift here. There might be a kind of extended downward move, but at least beginning of December, the dominant cycle composite, which we show here, turned and could expect an upswing here. So you can deactivate it. Then we are by mid-November. If you add this, it gets into 1st December. So maybe the next 4 weeks, the sideways move might continue, and then the upward push might kick in from the cycle. That's oil. So let's also have a look for sure on the current. So let's leave the commodity section here. Let's maybe switch to the key markets here. Start with the S&P 500. I don't comment on today's market behavior. We are anyhow in a strange, very volatile period here, but at least getting back to cycles. I mean, we do the same procedure here. So let's look at the current spectrum chart. So there's very obvious that the current key cycle driving the markets has a length of 174 days, and with a high Bartle score and very high strength here. It's really standing out in this spectrum diagram here. You see it also on top. So this would be the starting point here for any analysis using the S&P 500. If you followed our analysis, we have talked about the cycle with a length of 174 quite a lot during this year. And we've shown this cycle already at the end of August. So maybe just for fun, let's go back to August here and update this analysis. So this has been the forecast in August, and we informed all of you, even in the blog, that the main dominant cycle is around the corner to turn. And this has been a period we all know where the markets had no ends, and all analysts have just raised new price targets. But the market at least turned and then moved sideways. So let's update the analysis to where we are today. The cycle is still there with the length of 174, as we can see here. Now we are in a kind of interesting, as always, the mid-cycle period here. So we are not through the full downturn of this cycle. We are just midways. We have approached midways of this cycle. So just following this single cycle here, we would kind of project kind of low or the end of the downward cycle, beginning of September or December, for first half of December as shown here. So now we need to monitor how the cycle behaves in the second half of the cycle, and if there might be reasons that the low might come in earlier, because the next cycle, so at least starting mid-December then, is a kind of projected upturn into the beginning of March next year. So during the next 2 to 3 weeks, it might be interesting if the cycle or the main cycle with a length of 174 might have kind of bottomed right now, which would show that the low has come in more early. And then we could already have seen the starting point here, and then we would see a kind of strong upward cycle move into February, March next year. So we need to add other measures here to fine-tune this topic. So we could add then also other cycles here, which, but again, would not fully change the picture here. So the main cycle still shows kind of downward momentum into the end of this year, and then upward swing into February, March, starting next year. Maybe to mention here, if you deal with these kind of cycles, and we're talking about main markets and business cycles, we all know that in today's world, and there's other research out, that the cycles are not as clean as visualized here by this kind of standard sine wave. So maybe let me explain you a little bit more background on this. If we talk about stock market cycles during the last 10 to 20 years, the cycle is skewed, which means that the upward swing is kind of lasting longer, while the downward swing is then shorter but sharper. And this skew factor, this is researched in a lot of articles, and you can read it across the cycle research. If you want to fine-tune these kind of findings into the cycle analysis, you could do this by tweaking now the cycle scanner settings here. So what you could do, you could also add the skew factor, which means that we are now skewing the cycle towards how it behaved during the last 20 years. So we could give it a slight spin here, just activate it. I will not go into the details here. Which shows you exactly then this skew here in the market, which means that the upswing lasts longer and the downturns then come in sharp and are more quick here, which means that the low has now shifted towards end of November here, while the tops are then more extended into the future. And this is not to backward fine-tune or to curve fit it. That's kind of research if you deal with economic cycles, which are skewed this way due to the market behavior during the last 20 to 30 years. So this is now the procedure, how to fine-tune a little bit your analysis. In the end, it's no major shift here. So what we now need to observe is, as from the current data, we are now approaching the bottoming phase here. We need to be careful now if the bottom is arriving now or even more early, and then we should expect the upward swing into March next year. So, but during these high volatile times, it's anyhow hard to fine-tune or trade on a day-to-day basis. That's the S&P. Maybe what's always important to cross-validate if you talk about major indices is what I like kind of sentiment measures here, which we also provide here in the data set. And as we've talked about the S&P 500, it makes sense maybe to have a look at the VIX index here. So because there's a for sure correlation in cycles between the volatility index and the main index here. So this is the volatility index. Let's do the same procedure here. There's one cycle standing out here with a length of 180, shown also here in this chart. So let's see what this cycle here suggests. So it's kind of bottoming around end of August. The reading is vice versa. So a low with the volatility corresponds to in the high in the market, and the high in the volatility then corresponds with a low in the market. So following this cycle here, it's quite supporting what we've seen in the S&P 500 here. So I think during the next week, it would be interesting now how the markets behave in relation to this cycle here, or if we have an overlay of other effects in the market playing out. But we need to observe here. I mean, this is the basic procedure, picking cycles here, using the kind of dashboard. I hope you've seen a little bit how to start with this kind of cycle analysis, and at least that's where we are today in the cycles, as we've passed more or less the first 20 minutes. Maybe let's review questions. There was a question on silver. Let's go back to silver maybe, if you like. We've talked about silver here, and I've talked about this cycle here. So we need to be careful, maybe to explain. Yeah, this bottom here was earlier as a cycle. That's maybe exactly the same if we put in the skew factor here. So and here you will see exactly the same effect. So as we're talking about yeah, kind of these business cycles here, it now fits better if we apply the same skew here, which is kind of part. This is how the markets behave. Yeah, exactly. So, and I mean, you've seen what happened to silver also this morning, but we don't need to overweight a daily moves here on this cycle here. But yeah, what you said, so what you should drive now is a kind of correlation with other not currencies, but other topics here. So if you're dealing with commodities or gold and silver, for sure it makes sense to look into the crypto area or the Bitcoin area here, where we have also, yeah, very sharp moves. And this is also an interesting chart here because, to be honest, there's no clear cycle standing out here. So if you have a look just at the Bitcoin cycle, there's kind of very, very fragile analysis on cycles here. You will see some in the shorter period of 40, 44 here, so down below. So there are some peaks here which really stand out with green cycles. So you could use the shorter cycles here, but these short cycles are in relation to that there is no longer term cycle, are very hard to fine tune anyhow. So I would not recommend, or I would be very careful picking these shorter cycles here, because there's no clear, if we reset this here, there's no clear longer cycle which you can overlay as kind of guiding factor here. So if you're dealing with this short amount of cycles, maybe you need to switch down to the next shorter period, like, I don't know, 4-hour charts or 2-hour charts, to see if there are longer cycles on hourly basis, which you could upload and analyze. But this is a little bit more than we could do today here. And this is what you will also see sometimes. So there's not always clarity about the cycles which are active here. So therefore, I would not rely on cycles as of today if we have a look at Bitcoin. Or you could try to load more data here. So, but then you go more into the past to check if there are longer cycles than showing up here. Yeah, that's mainly it around Bitcoin. So we could have a look at Forex market, the euro US dollar here also. Okay, so this is the current market behavior here. Yeah, there's some interesting ones standing out here, 67, and 2 larger ones which could be used. So let's cross-check this one here. So this is the shorter cycle, and again, I would always be careful just picking shorter ones, but in combination with these longer ones, it would make sense. Those 185 here, I think this one is the 85, maybe the 239. But yeah, that's more or less it. So this is how to pick the cycles, by the way. No, I think it's not always easy to just use the table here. So therefore, it's always recommended do a combination of looking at the spectrum chart here. And I think it's very easy approach. Just looking at the main peaks here, the green triangles, and therefore I've picked these 3 here, which you might need to look or to filter your list here. And now picking these 3 cycles, I mean, this would be a kind of current euro US dollar situation here. So always also showing kind of peak in August, and yeah, similar to the main markets here, then maybe a low beginning of December, and then the next upward swing in the euro US dollar chart here. So I mean, we have kind of very, very tough markets right now with the environment. We have different influences here, which make cycle analysis hard. And maybe let's end the session for today with this comment. When you have a lot of noise in the markets, it's always hard to use cycles just to time, because cycle analysis works when the noise level is low and the main signal can be detected here. And I mean, the current environment with kind of COVID election in the US, uncertainty about the future brings a lot of noise, and we see this now manifesting in the high volatility markets. But anyhow, maybe to end on that, we've seen a lot of cycles here. You need to do this on a kind of daily basis. So we will do this now in a kind of weekly fashion. Please also comment down below the video what you maybe like to see in the next session for analysis, so we can then follow up on other topics. And I would recommend, please make this your daily routine, checking in the cycles, and it becomes even more interesting if you see the same length of cycles becoming active over a long period. Then you will get a kind of feeling what behaves. Yeah, at least I think this should be a kind of short period, 20 to 30 minutes. I hope you've seen what the status of the cycles is today. Feel free to use this in your own analysis, refine your cycle analysis, build more complex composite. Drop us your questions, and we will revisit this topic next week on Monday again. And I hope you will be part of it next week, Monday. So see you next week. Thanks for watching.